Welcome to Learning Equinox. Firstly, apologies. Yesterday we could not upload our video on financial literacy due to some technical issues at our end. In our video today on financial literacy, we shall discuss on how you can save on your home loan. In our earlier videos, we have already talked about the power of compounding. Also, at many intervals, we did discuss on the significance of paying off your loan as soon as possible. Home loan is one such loan which is mostly taken to buy a house. It is common since it helps create a capital asset, so many people opt for it. It also comes in with a lot of tax benefits. It is long term, mostly for say 18 to 20 years or more. In this large tenure, we fail to realize how much amount of extra money we give away in the name of EMI. So, it's best if we start early in life and also try to pay it off as soon as possible. Let us understand today how can a home loan help you save your money. Before we dive into the video, hope you have by now subscribed to our channel. If not, please do so by hitting on to the subscribe button. Also hit the bell notification so that you get notified every time we upload our videos. Now moving on to today's topic. In our today's video, we shall firstly try to understand how much is enough. What is the quantum of home loan we should go for? Secondly, we shall understand how does a home loan work. How much do we pay towards interest in our EMI? And lastly, we shall understand whether the tenure reduction will lead to any benefits or not and how we can save more. Firstly, let us understand the basic rule of 50-30-20. If you have still not watched our video on this topic, I shall leave it in the I button here. In this video, we had discussed that 50% of your monthly income is towards your needs, 30% is towards wants, and 20% goes towards savings. Now, home is a need and thus home loan comes in the 50% basket. So, make sure that your home loan does not exceed 35% of your monthly income. What do I mean? Let's say if your monthly income is 10,000 rupees, your home loan EMI should not exceed 3,500. That is 35% of 10,000. Let's say if your monthly income is 50,000, your home loan should not exceed 17,500 per month. Now, out of your needs basket of 50%, if you shell out 35% towards home loan, you will be left with 15% towards basic needs of food and clothing. This way, you will balance out within the 50%. Now, you will tell me why 35%. If you exceed beyond 35%, your rest need basket will fall short. And what will happen? You will run out of money. To feed your necessities, you will start removing from the balance 30% of wants and 20% of your savings, which means you will land up saving less because desires again come with loans. Your investment basket will go towards fulfilling your desires, you're paying off your loans, and you eventually fall yourself into the debt trap. To avoid such situation, it is very important to make sure that your home loan EMI should not exceed the maximum of 35% of your monthly regular income. Now, let us understand the second part, that is how does the EMI on the loan work? How much do we pay towards interest in our EMI? Let us understand this with an example. Let's say you take a home loan of 30 lakhs at 8.5% per annum for a tenure of 20 years. Here, your monthly EMI will be around 26,035. Your total interest payout in 20 years will be 32 lakh 48,321 towards your principal of 30 lakhs. which means in 20 years your total payout is going to be 62,48,321. This means that your interest payout is almost more than your principal payout. This is simply because of the large tenure. If you remember on our video on power of compounding, we had talked about the chessboard of 64 boxes, which means the number of times the compounding took place in that example was 64 because the check boxes had 64 boxes. In this example, it is getting compounded 240 times because your tenure is 20 years, which means 240 months, and you are paying EMI, which is a monthly component. Since your tenure is high, the interest component becomes high. Let us now move on to the third part, that is, will a reduction in tenure really help? Now let us say instead of 20 years, you make it 15 years. Let's see what happens here. We'll keep the amount 30 lakhs and the interest rate also the same as 8.5. Just reduce the tenure from 20 to 15 years. Your EMI becomes 29,542. Your interest payout for 15 years is 23,17,596. So by reducing 5 years in your home loan, you save around 9,30,725. Now let's see what happens if you reduce the tenure to 10 years. If your tenure is 10 years, other things remaining same, your EMI will be 37,196, which means your interest payout will be 14,63,485. So by reducing to 10 years, you are saving 17,84,836. So, how do you feel saving 17 lakhs? Isn't it of a great value? This is why it is important to clear off your loans early so that you save. Here, you will ask me about one more factor on home loan. You will say home loan gives me tax benefits. Let me explain this a little more. What are these tax benefits for home loan? I'll just make it simple. Everyone generally understands the two main benefits. One is on the interest component and one is on the principal repayment. I'm not going to discuss planning of taxes and discussion on construction of house property, or if you have more than one house property or a self-occupied or a rented. I'm not getting into those details. Just the simple basic deductions which are available, which will be deduction on interest and deduction on principal repayment. Deduction on interest paid on home loan maximum is available up to 2 lakh rupees per annum. Deduction on the principal repayment is maximum available up to 1.5 lakh per annum. Let us look in the three scenarios of 20 years, 15 years as well as 10 years that we just talked about. If I take the first 12 months interest, generally in the repayment cycle, the interest component is the highest. So here you can see you are shelling out in the first year because it's an annual deduction. I have converted it into annual figures. For 20 years, you are actually shelling out interest of 2,52,710. In 15 years, it's 2,51,031 and in 10 years, it's 2,47,366 against the maximum benefit that you can take, which is 2 lakh alone. So by reducing the tenure, you are still getting a benefit of 2 lakh rupees. It does not make a huge difference here. Let us look at the first 12 months of the principal repayment. If you are taking a 20-year loan, it is 59,710. If it's a 15-year, it's 1,03,477. If it's a 10-year one, it's 1,98,983. The maximum amount of the principal repayment benefit that you can take is maximum up to 1.5 lakhs, which again, if it's a shorter tenure, you benefit there. I think this is quite self-explanatory that if you reduce this tenure, still your interest component remains above the maximum threshold available for exemption. Just that by lowering your tenure, you can save huge amount in terms of interest. Now, does that actually matter or make a big difference in your tax structure? Think about it. Now coming to the last part of this video, how to save. Suppose you've already taken a home loan for 20 years. Let's say the same example, 30 lakhs at 8.5 for a tenure of 20 years. Here your monthly EMI is 26,035. Your interest payout in 20 years is 32,48,321, which you will pay out in 20 years. Now, if you pay off one EMI extra in a year, which means if I am disposing of 26,000 extra in 1 year, which is I guess practically possible, which means your tenure will reduce from 20 years to 18.3, let's say 18 years. This means that your interest payout for 18 years is going to be 28,67,357. So by just paying off 26,000 extra every single year, you are going to save 3,80,964 in terms of your interest component. Isn't that a great number? Same way, if you pay off 2 EMIs in a year, which means 26 into 2, that is 52,000. Again, your tenure now will reduce from 20 years to 16.67, let's say 17 years, which means your interest payout for 17 years will be 26,81,149. Here you are saving almost 5,67,172 by only paying off 52,000 extra in a year. Explore the possibility. Explore options when you get an additional extra income trying paying off this EMI. This is how you can save your money by clearing off your loans early in life. Small amounts pooled in every year can help in bring a larger difference. Little drops of water make the mighty ocean. Yes, it does definitely matter. And once you master the art of compounding and make the most of it in your savings pattern, you will definitely reap the benefits of your investments. Do let us know how you like this video. Share your comments in the comment section here. If you like the video, do give it a thumbs up and share it with your friends and family if you found it useful in any way. Subscribe to our channel for more such educational videos on different topics. Thanks for watching and stay tuned for more.